Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
All right, the media M&A trade that just won't go away. Warner Brothers Discovery says an amended takeover offer from Paramount Skydance is inferior to its deal with Netflix and urges shareholders not to tender their shares. I don't know what's going on here, people, but our next guest does. Geetha Ranganathan, she is the media analyst for Bloomberg Intelligence here. Actually, Geetha, I thought we'd have something done by now. I mean, these offers are pretty clear. The values seem kind of similar to me. What do you think's going on here?
Yeah, so this time what Warner Brothers is saying, in addition to the fact that the offer is actually inadequate, this is what they said the very first time when they rejected this $30 bid from Paramount. They obviously wanted the personal guarantee from Larry Ellison, which they got. They wanted, Paramount to raise its termination fee to $5.8 billion to match Netflix. That also they got. But now they're saying that they actually really do need, a sweetened bid. So they cite a number there. They say that if they had to terminate their agreement with Netflix, they will also incur, obviously they have to pay the termination fee, plus there's going to be significant financing costs. So all of that comes out to about $1.80, close to $179 or $180 a share. So they obviously need to be compensated for that. So basically, I think, they do need a sweetened offer. And the big thing that they highlight this time around is the amount of debt. So they actually call this a leveraged buyout, probably the biggest one in the history of M&A. And so say that, it just presents too many risks and too many uncertainties and is definitely inferior to the Netflix offer.
Right. The conclusion that it has drawn and what it's recommending to shareholders remains the same, which is go with Netflix's the Netflix bid. Having said that, what does it mean that Warner Brothers Discovery wrote this letter to shareholders? Do we get the sense that shareholders are tendering shares to Paramount?
Not so from what we've heard, when it was last reported, Scarlet, about 500,000 shares were tendered at that $30 price. Remember, we have about 2.6 billion. So we're really very, very a long ways off. So, I think shareholders definitely expect the price to go up. They do, think that there is going to be a bidding war. The number out there on the street is that David Zaslav is looking for $34 as, the final offer at which he will sign his company away to Paramount. I'm not sure whether, Paramount is actually going to raise their offer, but that is really the number that he's looking for. And we know him. He's really a master craftsman when it comes to getting the best deal for his company. So again, it's a wait and watch.
We used to call that the final offer. This is our final. We're not kidding around anymore.
So final that we need to say it twice.
Exactly. Geetha, we have not heard really too much from Netflix, have we?
So all that Netflix said today, Paul, was after, Warner Brothers Discovery put out that letter was, they said, yes, we continue to, work with Warner Brothers. We're working with the antitrust authorities. We're working with the regulators, and we hope to get, the deal done. So everything kind of proceeding as expected from the Netflix management team.
You mentioned $34 a share is what David Zaslav is really eyeing. Is there any reason to think Netflix will raise its offer?
Netflix needs to raise its offer, Scarlet, only if Paramount comes back with a sweetened bid. And we do think that they actually will raise their offer. They really believe, even though the market price reaction obviously has been very negative to this whole Netflix deal, just kind of given that it really kind of complicates a very clean narrative. I think Netflix really believes that they're doing this, they're playing the long game here. This is a great collection of assets. Again, it's not just the cost of doing the deal, it's the cost of not doing the deal. And they obviously do not want to strengthen their competitors. They believe this is a great collection of assets that gives them, tremendous value over many, many years to come. So I absolutely think they will raise the price, but the first move has to be from Paramount.
Geetha, part of the Warner Brothers Discovery plan before this offer was to spin out their cable networks. And that's exactly what Comcast did several days ago, spinning out its cable networks. The new company is called Versant Media, VSNT. That thing is traded off about 25% just in the last few days. man, what does that tell you about the cable network business and maybe how it might affect these bids?
Yeah, it's really bleak. And so this actually strengthens the case for Paramount. This is exactly what they were saying. They were saying, let's buy this whole thing because you don't know where this, the global networks business, the TV networks is going to actually trade. And here we go. Versant is actually just proving their point. So does not really bode well for Warner Brothers. But again, I think still Warner Brothers will continue to have the upper hand because, again, they can argue that their cable networks, again, a slightly different business, much larger in scale compared to the Versant properties, has an international footprint. But again, the writing is on the wall, Paul, as you've said many times. I mean, the TV network business is bleeding, not a slow death anymore. This is really happening fast and furious.
Stay with us. More from Bloomberg Intelligence coming up after this.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Nvidia CEO Jensen Huang says the artificial intelligence industry always needs more energy. On the sidelines of the annual consumer tech event CES, Jensen Huang and Siemens CEO Roland Busch spoke exclusively with Bloomberg's Ed Ludlow on their AI partnership.
From Hopper to Blackwell, we increased energy efficiency by 10x. From Blackwell to Rubin, we increased energy efficiency again by 10x. And that translates directly to our customers' revenues because in the case of an AI factory, whatever factory size you have, you're limited by the power.
All right, that was Jensen Huang. He is head of Nvidia, and Siemens CEO Roland Busch speaking exclusively with Bloomberg's Ed Ludlow of their AI partnership at the Consumer Electronics Show in Las Vegas. Let's get the latest reporting from Vegas. Caroline Hyde joins us. She's out there. She's the BTech Co-Anchor for Bloomberg News. Caroline, it just seems like, you listen to Mr. Huang, Mr. Busch, the need for AI and the spending on AI shows no real signs of slowing yet. Is that the vibe you're getting out there?
That is very much the vibe we're getting. We heard from Lisa Su yesterday as well, CEO of AMD, saying in the next few years, you're going to have to 100x the amount of compute that we currently have. Her stock's still falling today, I might add. And so many people may be factoring in this extraordinary scale at which we're likely to see the compute needs still ramp up. And it's having a marked effect on certain companies' stocks. Like I'm sure you were covering yesterday and into today. SanDisk. It is up 1,000% from its lows back in April, but it's up almost 50% in the first few trading days of the year. This is all about a shortage in memory storage. We are seeing still the fact that we're worrying about energy, as Jensen says. We're worrying about memory, as you're seeing impacting Samsung stock as well. We had a Samsung executive on the network yesterday saying, look, we're going to have to see a hike in prices because supply is just so tight. And yet still people question whether we're in some sort of bubble. But all I'm hearing is the infrastructure just needs to get ever bigger, and we kind of need to get on board with that.
Yeah, speaking of memory chip makers, Micron, the biggest U.S. memory chip maker, jumping 240% last year and up about 10% yesterday.
Nice.
So just an example of that. So Caroline, the Consumer Electronics Show, Paul and I were reminiscing how once upon a time it meant big screen TVs and other gadgets that companies dreamt up, but consumers may or may not want to sign on for. Is that still what's happening at the CES, or has it turned into a high-level discussion on chips and AI?
I think they're managing to walk both sides. We're still seeing those big unveils and discussions coming from Nvidia CEO, from AMD CEO, from Qualcomm CEO. They're talking about what's inside these electronics or what's inside the compute that is needed to foster these electronics. But then you have Samsung, which is very much on the AI train with its chips, but also unveiling the latest, greatest Samsung frame or the latest TV that has, you can see all around the curvature of it, or the fact that they are still trying to think about how your home is going to be connected, how your television is discussing with your oven as to whether or not the food is cooked, and you get in between messaging between the two too. I mean, there are companies that still continue to unveil. There are also the ludicrous. I mean, there's lollipops that play music as you eat them. There's little toys. Everything that seems to be about AI and about companionship is something that just seems to involve some sort of cuddly toy that talks to you. But apparently cute is the way in which we're going to go forward. But there are the vacuum cleaners. There's the massage chairs. It still very much has this idea of pushing the innovation forward. And the main thing, guys, I cannot walk without seeing a humanoid robot of some sort. So we're going to have some big interviews a little bit later. We've got Boston Robotics, for example, coming on the show. And that's really Boston Dynamics, in fact, which has a huge new unveil of its latest humanoid.
Stay with us. More from Bloomberg Intelligence coming up after this.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Well, there have been lots of big games in the lead up to the Super Bowl, and of course there will continue to be as we head in that direction. So let's bring in Brian Eggers. He covers everything for us, from the gaming companies to the lodging companies to the cruise ship companies. Senior gaming and lodging analyst here at Bloomberg Intelligence. And Brian, you and your team have done some work on how DraftKings is positioning itself for the NFL playoffs.
Yeah, so DraftKings and FanDuel, among other things, recently rolled out these prediction market apps, which are separate from their sports books. And this is really to compete more head-on against Kalshi and Robinhood and other of these financial firms that offer these event contracts in a number of states.
How big is, I'm hearing more and more about this prediction market. How big is this thing?
I mean, this is potentially really large. I don't have numbers in front of me, but the key thing is that Kalshi and Robinhood are trying to do this in all 50 states. There are about a dozen states that have either told them cease and desist because they effectively are engaging in illegal sports betting, according to the states. Or a couple states have warned DraftKings, FanDuel, don't do the same thing if you've got a sportsbook license. So what DraftKings and FanDuel did was try to go into states with this product where they don't operate sportsbooks. They can do prediction markets on politics or entertainment events in any state, but the real issue is with respect to sports. That's where they limit themselves.
Let me ask you a dumb question, and maybe we don't know the answer to this yet. Who is the target audience for a sports prediction market versus a sports contract and in prediction market setting versus, just a regular parlay or simple bet in a
so regardless
sportsbook?
of the type of person, in terms of the type of area or territory, think about the fact that you've got mobile sports books in kind of almost 30 states, 30 some odd states, DraftKings, FanDuel, and 25 of them. Other states, big states like Texas and California, that don't have legal sports books and sports betting, that's a logical market for Kalshi and for Robinhood to go in there and say, you can do these prediction markets and engage in that even though sports betting isn't active and legal in the state. That's really the big
So what would a Texas and a Florida say about that?
Right. So without going through every state, there are about a dozen states that have either specifically told Kalshi and Polymark or Robinhood, cease and desist, don't do this. Okay. A few others have issued letters warning DraftKings and FanDuel do not offer a sports prediction market in a state where you've got a sports bet license. So what FanDuel and DraftKings did is, 17 states for DraftKings, 5 for FanDuel. They're offering this product in states where they don't have sports books and where sports betting isn't, quote, legal.
Who regulates the sports prediction markets?
So it's very confusing because the sports books are regulated by state gaming regulatory authorities. The prediction markets are regulated by the CFTC. So it's state versus federal. And that's been the argument of Kalshi that, we're a financial futures contract. We're not sports betting. We are federally regulated. The states have pushed back and said, no, this is a form of effectively unlicensed sports betting. And ultimately, I think this heads to the Supreme Court. That's certainly the view of Elliott Stein, our litigation analyst.
What do the casino companies say these days? What do they say? Does that impact their sports book and their sports betting? And
on the margin, to the extent that MGM and Caesars have mobile products, it's very possible they'll look into this type of product as well, again, in those states where sports betting isn't legal. So everyone's going to think about it. And the real other wrinkle is Texas and California, once they realize we may not have sports betting, but we have effectively sports bettors, if you believe that's what prediction markets are, we might as well legalize it. And so there's a whole bunch of ramifications to this.
What about Native American tribes in states like California, in Connecticut? Where did they fit in? How do they fit in?
So it's an issue. I mean, in California, although sports betting isn't legal in California, the tribes have themselves challenged and through legally the likes of Kalshi and Robinhood. I don't remember which one. So, to the extent that tribes have opportunities to operate sports books, which effectively Florida has the Seminole tribe operating Hard Rock betting site, even though DraftKings, FanDuel are not involved. So the tribes very much will care to the extent that this is effectively a competing product as consumers might perceive it.
So is betting just going crazy, the total dollar amount? I see kids, high school kids, having conversations in detail, showing a level of expertise, which really blows me away.
Shocking, right? Yeah.
Kids, high school kids. And I don't know. It just doesn't feel right.
It's surprising, and it also gets very problematic when you have college kids, college games, college players. So, but yeah, there's a big national draw to this, and I think I don't think DraftKings and FanDuel get as affected as some might fear in states where they've got a sports book, but in states where they can't operate a sports book, but Kalshi and Robinhood and Polymarket, others are offering prediction markets. That's where I think they see risk as well as opportunity.
Brian, what about the sports leagues, the NFL, the NBA, the NHL, the MLB? How do they fit into all this? I mean, are they going all in with the prediction markets?
Well, I think so. They're watching obviously with interest. I mean, the major principles in terms of where this heads are state regulators versus federal regulators, states issuing, in some cases, cease and desist orders, and ultimately, because there's a lot of ongoing court cases, many on appeal, the Supreme Court is the logical destination for the legality of this.
But I mean, that's months, right? Maybe years away?
Depends on the urgency. I know Elliot Stein believes it could happen potentially as early as 2026 that there's a decision, but we don't know. But ultimately, I think it needs to be clarified and resolved as to who has jurisdiction here.
It is crazy the amount. I mean, just a few years ago, you wouldn't even have thought this. But now you get sports teams in Vegas.
Yeah.
I mean, so they've...
And I think my way to start this is leading up to the presidential election, there was a lot of activity on Kalshi and Polymarket about who would win the election. And that kind of kicked off a lot of popular interest in this, which means that's when they became involved in sports prediction markets actively a year ago.
Stay with us. More from Bloomberg Intelligence coming up after this.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Looking at a story here today, Alaska Airline ordering Boeing company aircraft, including 105 narrow-body 737 MAX 10 models and 5 787 wide-body aircraft. So good day for Boeing. The stock's up about 0.8%. The stock's up about 34% over the trailing 12 months. George Ferguson joins us here, Senior Aerospace, Defense, and Airlines Analyst for Bloomberg Intelligence. George, this seems like a nice day, a good order for Boeing. How are they doing out in the marketplace?
Yeah, I think it was a nice kickoff to the year as far as orders. We've tracked them through November of last year. We get to see December order and deliveries from Boeing or Airbus. But through November of last year, Boeing was beating Airbus in the order game for the year. And so, we had sort of expected this. There were some core customers, I think, that were probably sitting on the sideline watching to see if Boeing was going to get its troubles behind it before it placed orders. And we saw a bit of a bounce back last year in 2025 as Boeing sort of pulled in a bunch of those orders. I think if you're an airline, when you're sort of fleet planning, when you have backlogs that are 10 years large for the most important airplanes, for the narrow bodies, you kind of got to be sort of in the order mode, every year or so many years, sort of topping up orders to make sure that you have airplanes coming regularly as either you're expanding or things leaving your fleet. So good to see Alaska do it. Again, we think a lot of Boeing customers caught up last year. This year, probably a decent order year as well as that catch-up continues for Boeing. And this was a core customer for Boeing. Alaska has been a core Boeing flyer. They recently bought Hawaiian. That added a bunch of Airbus aircraft to its fleet. Not a lot, but a bunch of them, a handful of them, actually more than a handful, 20s or 30s. And I think another indicator that they've kept the Alaska Airlines as a core customer, and I would see them kind of going to a more pure Boeing fleet in the future as they ease out some of those Airbus aircraft.
This seems like a big order for Alaska. Does this signal any change in strategy, or what's going on there?
Well, I think it's pretty interesting, right? Alaska, they're 787 they think dash 10s ultimately when they buy them, the biggest 787. They've got an order for 5 of them. Alaska traditionally had been just a narrow body, kind of U.S., but really West Coast focused airline. Since they bought Hawaiian, they've added international routes. Clearly, they added Hawaii. Hawaiian had routes into Asia where there's a fair amount of demand for Hawaii. Alaska looks to be trying to grow into, a global airline. They've got European service now too. So this is, I think, a continuation of that push by Alaska to be what it wants to be when it grows up, I guess, which is going to be maybe another one of the big U.S. full-service carriers.
Is there room, George, do you think, for another U.S. full-service carrier?
I think if you do it well, there probably is, right? I think, look, you got Southwest coming as well. Southwest is adding premium seating. They're already pretty large in the U.S. They don't have much international, but Southwest is definitely a force to be reckoned with. But they're leaving the old world where they were very much a pure fleet and they could control costs well, going again into the premium and making their operations more complex. Alaska kind of coming the other way. They already have premium, now trying to go global. I mean, I think going back to Alaska, they've got to figure out what they want to be when they grow up, because I don't think they can survive just as a largely West Coast airline. I think Hawaiian was the beginning of that expansion strategy, which included long haul. These follow-on orders, I think, reinforced to me that's the direction they're going. They're going for a global airline. It's going to take a while to get there, but that's what they're going for.
Would regulators ever allow, the combination of Alaska and Southwest, for example?
That's, to me, I think anytime you get some of the big carriers involved in buying somebody, I think it gets difficult. I think it would be hard. I think Alaska would have to look at something maybe smaller, or Southwest I think would be difficult to do an acquisition, maybe a very small acquisition. But if Alaska's getting together with somebody, I think it's kind of JetBlue and down.
What do you think here, just in 2026, air traffic, air travel, how do you think that's going to shape up this year?
Yeah, so we see a lot of additions to premium carriers, and we see carriers adding premium seats that weren't traditionally premium carriers. So to us, it feels like premium could be under a bit of pressure as we get into the new year, or 2026 here, because it looks like a lot of people go in that direction. That's where the earnings have been driven lately. Loyalty programs, super important. Basic economy world looks like it's starting to right size. Things could get better, but it will take a little time, I think.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.